So, hello everyone, welcome back to our Digital Traders Summit series. It's already the 9th time that we are hosting this webinar for you, for our customers and friends. And yeah, very pleased to have as well, again, a great topic and speaker with us. As you see, we are not hosting it today from our office in Munich. I'm on vacation in France. And before I get any questions here in the chat, this is not my apartment. It just looks nice and it's fake in the background. So just to make sure I'm sitting in front of a gray wall. Anyway, I think we have as well still a good setup to have an exciting hour in front of us. So far, we had already very good talks about the fundamentals of the gas, power, and as well emission markets in the last weeks. I think extremely exciting discussions with our experts. Now it's time to look at the markets more from the technical standpoint. No one would be better suited than David Linton. Happy to have you here. He's the CEO of Updata, one of the leading expert, let's say, since many, many years in energy when it comes to technical analysis. And he's, his comments on the market are really followed by many of you and any other energy traders. So great to have you on board. I learned yesterday that you are an avid sailor, as I am. So please help us navigate the European energy markets, set the course for us, and tell us what's ahead of us.
Great, thanks for having me. So, can you see my screen?
Yeah, I just want, no, we can not yet, but please, as well as always, contribute to this session, help us, put your questions into the Q&A functionality of Zoom. I will try to pick it up, not just at the end of the discussion, but if you feel that you need to be something clarified or want to comment on something during the presentation from David, please feel free to do so.
Okay. So, what would you like to know?
Yeah, I mean, look, as an intro, what is happening over the next months and weeks? I mean, the last months have been extremely exciting. What will you see really ahead of us? How do you look on the upcoming future of the energy markets?
Yeah, so I'm really pleased you said months and weeks, because for me, I always have to start by saying, what's your time horizon? I'm asked all the time, I mean, every day I'm asked, what's your view of power? What's your view of gas? And before I can even answer the question, I'm always having to say, what's your time horizon? Because if I say gas is going up, someone will message me 3 days later and say, but gas has fallen. And I said, yeah, I meant over the next 12 months, not over the next 3 days. So this time horizon table is something we developed years ago, where basically, if you're looking at a daily chart, you're thinking weeks ahead. And if you're looking at a 60-minute chart, you're thinking days ahead. And if you're looking at a weekly chart, not many traders look at weekly charts, you're thinking months ahead. So basically, we have this way of, and this is one of the great things about technical analysis that's very hard to do with the fundamentals, where we can have a view that's short-term, medium-term, and long-term. So today, I will talk all the time about the short-term, the medium-term, and the long-term. And so hours means days, days means weeks, weeks means months. That's the way to think about it. And of course, everybody has different views of what long-term and short-term actually means, which is why I put this at the bottom of this slide. But for the medium term, that we're always thinking about the daily chart, and the long term, the weekly, and the short term, the 60 minutes. So that's a key factor, really, is just to think about the time horizon. And then I think we need to think about maybe the big picture that's driving a lot of this technically as well. Mm-hmm. So really, I've got this chart. This is taken this morning off my system. Just some of the big things to think about that, and I'm still thinking technically. I'm not thinking the reasons why. I'm looking at what's happening in the charts, not why it's happening. And as a technical analyst, I don't really care too much about why it's happening. I don't really need to know why it's happening. I'm studying what the charts are saying. And so I've got 6 charts here, which I think are the charts that I'm sort of always just keeping an eye on, the big picture that might have an impact on sentiment in the energy market. So the first one is the US stock market. This is the S&P 500 index. We made a high. This is the recovery. So the recovery has been very strong. We're not making highs that are higher than we saw in before the crisis hit in March. So in this instance, we've still not managing to be higher than where we were before. And from a technical perspective, that's really important. The fact that we've not managed to break this previous high still means we have to be cautious. And interestingly, we made a little high on the 8th of June on the S&P 500 index. So this is US stock market, but it's a very good barometer of sentiment in financial markets, obviously. And the fact is we're just struggling again to break higher than this high that we saw now 5 weeks ago. So that's still quite significant. The market is still quite nervous. There's lots of information around, like the put call ratio is the highest it's been in 8 years. There's all these sorts of things happening. The NASDAQ has broken to a new high. So we've seen that the market has been driven very heavily by tech. And it's worth remembering that Amazon, Microsoft, and Apple, those three stocks make up more than a third of the NASDAQ 100 index. And of course, the virus has effectively driven these stocks much higher because they've been beneficiaries in this market that we're in. But interesting, the NASDAQ on Monday did for the first time since actually 2000, March 2000 this happened. We were up 2% on the day on Monday, and then we closed down 2%. So we had a 4% move. And from a technical perspective, we call this a bearish engulfing candle. So Monday was a real warning sign from a chart perspective that tech might be crumbling, or that it might have run too far. And we're now in reporting season. We've got the US banks reporting, more banks reporting today, Netflix reporting. Can these stocks outperform the expectation? This is always the thing technically. There's a lot priced in, if you like. This chart here is the VIX volatility, and that's slightly rising again as well. So we need to be aware of that. It hit the highest level that we've seen since the financial crisis in March. And we are still at double the volatility levels that we saw back in February. So there is still a very high risk of a secondary lapse in markets. So we need to be aware of that. And then on this chart in the bottom left is gold. This is actually a 20-year chart of gold. And gold is nudging new highs. It's holding $1,800 at the moment. We see targets for gold much, much higher. And so it is quite likely that gold will make new highs. And of course, that is a risk off trade, if you like. So that's something to be aware of. Chinese stocks is another one that we look at. So China actually jumped these last couple of weeks. It's retraced quite a lot overnight. It was down 4%. And we are seeing US-Chinese trade tensions entering the worries that the market has at the moment. But the fact is that Chinese demand is back. And that has implications, of course, for crude oil and energy generally. But it's interesting to see that sentiment in China is now pretty strong. And last of all, the US dollar has been steadily rising, but we've had again this seesawing in price action. So the dollar is quite important for commodities, particularly crude oil. If the dollar goes up, then crude oil goes down, and vice versa. This relationship is fairly well known. It's a long-term relationship, but it's just, again, another thing to watch. And at the moment, most currencies are trading sideways since the crisis, where we had a sort of spike in either direction. So that's just the macro. So I guess everything I'm going to talk about in energy slightly depends on all of these things just staying roughly where they are. If we see a collapse in stocks, or we see a massive rise in the VIX volatility, or we see Chinese stocks collapse or the dollar collapse, all these things could change the picture. And so this is one of the things as a technical analyst, you make predictions, but you also need to say, if this happens, then this. So this is the picture at the moment from the big perspective.
Yeah, and you mentioned already it's extremely influential for the oil market. Let's say the mother of all energy markets.
Yeah.
What do you see there ahead of us?
Yeah, so let's move to oil. So the charts that I have here, and I predominantly will use today, these are cloud charts. It's a Japanese analysis technique, and these are point and figure charts. Again, these are very good for generating the trends and targets. These charts are actually decades old. Point and figure is actually over a century old, so it's not a new thing. But bringing these charts to energy is a really big thing of what we do. And what I'm looking at here is a weekly chart, a daily chart, and a 60-minute chart. And this is time horizon wise similar. So the top two charts are my long-term view, the middle two charts are my medium-term view, and the bottom two charts are my short-term view. And so that's really allows us to have this multi-view of what's happening in the market. So the long-term trend for crude oil is still bearish. We broke down through this $60, then $50 level on Brent, and we haven't recovered back. So we've recovered a lot of ground, but we are still below the levels that we've seen for the last few years. So it is always just remembering that the long-term trend is bearish, and whilst we're seeing a recovery, we will almost certainly hit resistance at these sorts of levels, $50, $60. So that is putting a dampener long-term on the price and the recovery. We do have a long-term target of $53, but we probably will not get there quickly and in a straight line. We will probably see a setback before we can rise again. So that's the long-term picture. The medium-term picture, this is the daily chart of Brent crude. We saw a low, it's hard to think of now, as $16. And this was, of course, when we had the negative spike in WTI, which was really, no one had any storage. So it basically, you had to pay to get rid of your positions. But what we're seeing here is a slowing down of the trend. So we have crossed into bullish territory across this cloud. We had a good recovery trend. That's slowed down, and we'll either roll over or this will be a consolidation where we'll start to run and rise again. But a lot of the recovery for crude oil long-term is probably done for now. It's found a level, and we're sitting, I mean, it's interesting, last night on markets, we did see crude oil reaching the highest levels since we've seen since March. So that is pretty bullish. From a technical analysis, fundamentalists say the price is getting too high, but technical analysts say that's good news. If the price is making new highs, we like that. And again, we're seeing targets to the mid 50s here, and one even as high as 60. I ignore the 60 target at the moment, because the one thing I can absolutely guarantee you is that we will hit 54 before we hit 60. So I'm not going to talk about the $60 now, but there are possibilities that we'll get into the 50s. I expect $50 for crude oil. Well, interesting, $50 for WTI would probably lead to about 54 for Brent because of the differential in price. So those are our medium-term targets. And short-term, we're bullish again. So this week, we started the week with clients saying that crude oil, Brent crude, was stuck between $41.50 and $43.50. It was quite a tight $2 range. And last night, we just started breaking out of this range, and we do have lots of targets to the upside. So provided we don't see a dramatic change in sentiment next week on the global macro that we were looking at, I do see oil going into the mid-40s next week. So we are edging higher all the time. So that's pretty well my take on crude oil at the moment.
Very good. And you focused already on Brent, but oil is definitely a global commodity. Gas becomes more and more as well. So how do you look on gas and the effects, the global effects you see at play here?
Yeah, so crude oil obviously is very much the global commodity, but gas markets have become interlinked. And before I look at European gas, I thought it was just insightful to just think about what's happening to gas markets globally. And these charts have all been normalized into dollars and therms. So we are seeing MMBTU, I should say. So we're seeing like for like pricing overlaid. And this blue line is US nat gas. This is front month contracts, and these are LNG contracts in Asia, and then TTF and MBP. And we see that MBP was particularly hit hard, and there are storage impacts there, and TTF also. But what's interesting is how the differential between US gas and European and Asian gas has really narrowed. And that's really interesting for US nat gas, of course, because it's not worth shipping it anywhere at the moment with this price difference. So that's having an impact. And if we look at just the long-term chart of US nat gas, we see here the shale revolution and how that is the long-term driver, the long-term fundamentals. Anyone can look at this chart and say, oh yeah, that's the shale revolution. But when it was falling sharply at these levels, we could see technically things were changing, but you may not really understand the impact of what that meant. But what we're seeing now in the US is, can they cap wells? Can they cut production fast? Can the rig count go down fast enough that the gas price can actually recover? We've been as low, below the 150s on the last expiry. So that will be the big question. Can the rig count cut fast enough for gas prices to actually recover, or will we have a glut? And storage numbers out today in the US will, as always on a Thursday, we get a little bit of a picture of that. But overall, global gas markets are still pretty bearish. They've tried to recover and they're stalling a little bit. So if we look to, and this is the screen, I literally just click on each of these and get a view on the market. So this is my daily, medium term, my short term, and my 1 minute. This is very short term. So this was this morning. And so this is TTF front month. So what's interesting about TTF is, unlike crude oil, we're seeing this trend breaking back down. It was looking like a recovery. It's hit some resistance and it's breaking back down. And TTF front month, we were saying it's bearish below €5 and it's bullish above €6. And we just struggled to hold this 625, 630 level on the front month contract, and we've pulled all the way back to 5. So, and there'll be lots of people telling me why this is happening, but again, as a technician, I don't really care why. But the fact is, we've now got a relapse, and we've got downside targets of 5 and looking like 480, 470, 480, 460. So it does look like TTF is at risk next week of going below €5. So long term, we do think this recovery will take hold. So medium to long term, we do think this will recover. It's just lagging a lot of other assets that are already clearly recovering. So gas is, if you like, the laggard. And we do see price targets as high as 11. So we could see this doubling, but it's going to fall before it rises. And if I go to...
yeah, we got one question regarding NCG
Sure.
gas from the audience. You focus very much on TTF because of the liquidity. Does it make sense to go specifically into NCG or so? Is there enough liquidity to perform this kind of technical analysis today?
Yeah, so we have quite a lot of clients who have spreads between TTF and NCG, because when TTF moves, they can then think about what the impact will be for NCG or gas pool. Generally, these products follow pretty closely. So you can analyze them separately and the targets would be valid, and I do like to look at them, but from a technical perspective, we always want to be where the most liquidity is, and we'll look at that when we look at some power charts. So I always look at TTF because it's where the liquidity is, yeah. But it's pretty fair to say that most of the time, if TTF is going to fall, then NCG and gas pool will fall. I mean, it's, so I think most people will be looking at the liquid contract in order to be able to trade the less liquid contract where there's less visibility on price.
Mm-hmm.
So on winter gas, we're seeing 11 euros, 11.28, 11.24. These targets have been in place a little bit. We've crossed into bearish territory this week as well. So next week is not looking like a great week for gas. That's it. But again, we will see this recovery come, but it's just taking longer. And that's the thing about recoveries. Quite often they just take time, and gas is not out of the woods yet. And I did actually add a chart here, which is the forward pricing, the forward curves on gas. Mm-hmm. And this just highlights, so this is 90 days ago is the green line, 180 days ago is the orange line, and 270 days ago is the pink line. So it just shows you how the whole curve moves down with the price. And this highlights that if you're a producer, you really want to be selling forward in a downtrend. And if you're a consumer, you really want to be waiting for prices to go lower in a downtrend. In an uptrend, the relationship is reversed. So if now we're starting to enter this new uptrend, we haven't quite made it yet, it will start to pay to buy gas forward. And if you're a consumer, you'll want to be buying at these sorts of levels. If you're a producer, you can be comfortable that your future gas pricing, you're going to get more, hopefully. So it's just the relationship between consumers and producers and how that plays out in the curve. But it's fair to say that the prices forward at the moment are, and of course the forward pricing on seasonal gas is still pretty high. You know, 2 years out, it's 14 euros. So that takes us to NBP. UK gas, also very liquid and behaves just slightly differently from TTF because of the interconnector and the fact that the UK has not mainland connected to Europe and storage factors. But we've been less bearish on NBP. We've been feeling this recovery is a bit stronger here. And we're seeing prices as high as 31 euros 31 pence per therm long term. But again, we're just seeing a bit of a relapse in price. So we're seeing moves back. We're 13 at the moment. We're seeing moves back to 12 potentially. So again, next week we expect NBP to fall before it rises again. But this recovery is looking pretty good. It's not yet happening. So gas, I think the message is crude oil's definitely in recovery. Its recovery is quite a long way in. Gas in Europe is still not quite in recovery, and there's seasonal factors and storage and all sorts of issues that will be driving that. But the charts are just telling us it's too early to call it absolutely we're recovering.
I'd like to bring in one question from the audience here.
Sure.
Victor is asking, I'm just reading loud now for you, that TTF front month will expire before going anywhere up. And the contango indeed points 11. Maybe he should focus on 1 month time frame ahead max.
Yeah.
Comes again to the right, what is the right time frame? And
yeah, so you'll notice on my chart, so I've got rollover adjusted. Mm-hmm. So from a technical, so I roll all my charts, the monthly ones. It's less of an impact on CALs, obviously, but it is a factor, and we've seen, and this was of course really highlighted on the WTI roll, where we went negative, and we saw that even last month on US nat gas, where we really spiked down at the roll. From a technical perspective, all you can really do is roll adjust the previous history in order to be able to analyze the data, because even though the price didn't trade here, it didn't trade the gap either. So the only way to really deal with this is to roll adjust the chart. And yes, sometimes when we do get these very big spikes down, I will look to the next month contract, and there's a point in the month as we get towards the end of the month where it would be better to look at September than it would be August. It's a very valid point. And if you're trading these products, you probably want to be looking at both. But yes, I get the point, and it is one of the problems with monthly contracts. And normally it's not a massive issue, but when we're seeing the market changing so much, then you will need to look at multiple contracts. Yes.
Okay. Good.
So coming. Sorry.
Shall we look at the power markets as well?
Yes, power. So I'm much, much more bullish about power than I am gas. It's not to say that I don't see gas recovering. It's just that it's really started already in power. So this is German power, Cal. And of course, this is a bit nicer as a technical analyst because we only have one change at the beginning of the year. I haven't bothered to roll adjust it because it has less impact now. But at the beginning of the year, I am rolling and adjusting because I don't want this gap in my chart. So power, we became quite bullish when we broke through this sort of mid-30s level. And from a technical perspective, the way to think of this is that the daily chart is the bulls all bought here in April, then the bears came back in, and then the bulls started buying, and then the bulls started paying more than the previous high. So what this is telling us is that people were prepared to pay more for power. As a technician, I really don't care why they are, it's just that they are. And so we're seeing this trend. It was a nice steady trend in recovery. This downtrend was broken, and now power prices have really been motoring. This is actually this morning's candle. We're down 1.4% this morning. So we are just seeing some early signs that the shorter term trend is breaking. And that's where I'll go to my 1 minute chart and say, okay, well, I've got downside targets of 41.75, 41.60. So short term, I can see that we will pull back to these sorts of levels. So, you know, today and tomorrow, I'm probably pretty bearish power. But next week, you know, once we start breaking higher again, and here we've got a converging price range on the 60-minute chart. Once we start breaking higher again, I will start to see new upside targets coming in, and then I will probably be more bullish. Because the medium term is bullish, it means that the short-term trends that are counter trend, the bearish trends will be quite short, and the trends with the longer trend will be longer. And so this is the importance of trading with the trend. So German power is looking really good medium term. It just means that short term we are just starting to see a little bit of a pullback. But I'm pretty bullish on German power, and we do have targets. It's hidden on my screen, but it's into the 40s. And we've got targets here, 44, 48, 46. So, you know, we're seeing targets into the high 40s. And there are longer term targets beyond that even, but, you know, at the moment, it's the high 40s. And we are holding 40 euros pretty successfully, I think. So the one thing we can absolutely say with confidence, which we can't say for gas, is that German power has bottomed. This was the bottom, and I don't see us going any lower. Gas, there is still a risk that we might make new lows. I think it's unlikely, but at the moment, because of the construction of the chart, the fact that we've gone to a higher low, and then a higher high, this is what is called Dow theory, that is very bullish for the power price. So I'm bullish on power. And I've also added a chart of French power. We can see here on the 60-minute chart, it's much less liquid. This is where having OTC data really pays off. This data is coming from Icon, so it is less liquid than most energy traders are looking at. And we saw that French power actually led the market. It recovered more quickly than German power. And again, it's looking a little bit less bearish, very short term, than German power. So French power is also looking very strong. I'm often asked to comment on French power. And Dutch power is quite strong, up about one of the only products up today. So generally speaking, I'm bullish on power, just some short-term bearishness, but very short-term. And I think we're going to see power prices going higher.
Yeah. And I think no other market has been that interesting than emissions in the recent weeks. Yeah. Here in May, where we had Lawson Steel with us, great discussion as well. Very interesting from a fundamental perspective. That was actually at the absolute low, I think, when we were talking about 15 euros at the time.
Yeah.
So yeah, what's your take on
yeah, well, first of all, just a quick one that coal is recovering. Coal hit $60 yesterday, and we're holding that level. So coal is actually, might be a dirty word for some, but we are seeing targets into the higher 60s. So coal is actually a definite recovery. We're through and away. So I just add that in. But coming to emissions, we did put out a note to clients this week. We're actually extremely bullish on emissions. So I've got targets going as high as 77, 83 euros on emissions. So that's really hard to imagine when we're at 30. It doubled from 15 to 30, and it's definitely got the capability to double again from a technical perspective. But and I always have to say, before we do that, we're hitting very strong resistance at 30 at the moment. We've been through a couple of times, but we're struggling to hold 30. So 30 is a level. This was the level that we hit last year in emissions. This is showing up on this point and figure chart. We hit this level last year. So that is really just playing again. People sold there previously and they're selling there before. We've run a long way. We see these trends are very strong, and we've doubled in price. You know, we haven't done that in other asset classes in energy. So we have in oil, but we haven't done that in, you know, power and gas yet. And emissions are really running away and doing that. And so it's no surprise, having run so far, that we're just hitting the buffers, and there's a bit of a tussle going on. And we're seeing today, really for the first time, we're just breaking down out of this trend. And so we are just seeing emissions going lower. I've got downside targets to 27.20, 27.50, 28. We're sitting at 28.75 when I looked at it this morning. So it does, and 26.50 even, but we might have to pull back a couple of euros. But I do really think this chart is looking very, very strong. We will start to see new short-term targets, very short-term targets emerging. And when we break that 30 euros, so my call would be, if we close above 30 euros for more than 3 days, I'd like to see it hold that level, then we're going straight to 36, and that will be pretty quick. So a 20% increase in emissions. 36, there's loads of targets to 36. We're seeing a couple here and on lots of other charts. This is the thing, people always think you look at one chart, but to arrive at this analysis, we're looking at lots of charts. And 36 is the number that just keeps coming up. So we see 36 as the next stop, and then into the 40s, 50s, and then long term, I'm talking like next year, 70, 80. So emissions is, yeah, it's going crazy, and that's why a lot of people want to know about it. But it's looking very strong indeed.
Excellent. Yes, it stays very exciting going forward. Thanks a lot for this great overview you gave us now on different aspects of the energy market. We still have enough time and I think as well interest to further discussions. So I would like to ask as well the audience to participate, put us in some more questions in the Q&A part. I start with a very broad one, which we received here from a colleague. Does technical analysis stand alone help predict forward prices? How do
I believe it does. So the only caveat I would say on that is if it's illiquid and there are lots of drivers, it's really hard. And it's less good at prompt markets. Prompt markets, again, are quite hard technically because of the disconnect between day and day ahead prices each day. It's a bit harder. You can use Dow theory a little bit, but on the whole, these charts that are liquid, things like emissions especially, it's very heavily exchange traded now on ICE. If there's liquidity there, the chart represents everything that everybody already knows about the market. So I always would say there's very little that you can tell me about emissions that's not already in this chart.
Yeah.
Maybe the slight exception with emissions is if the European Union decides to make some policy announcement that can really move the price, that will not be in the chart, but then it's not in the fundamentals either. So, if you have no way of knowing it, then that's, but on the whole, if it's traded and relatively well traded, the chart represents the money. It represents everything that everybody knows in the market.
Yes.
So that's what we're looking at. So my answer is, I think it's probably more valuable than the fundamentals. And we were talking about this earlier, that the fundamentals will be right in the long run. So someone will be able to tell me why the carbon price has to go to 100 euros for the long term and everything that's happening, but it doesn't necessarily help you trade it today or tomorrow. So the technicals, as we said at the start, help you think about short-term, medium-term, and long-term. And if you're trading, you need to be able to resolve those time frames in terms of how you're trading. So yes, I firmly believe the chart is everything.
And does that create somehow a level playing field in this short to midterm range? I mean, data is available, tools are as well there, or?
So even technical analysts will disagree. So the data is there, but how everybody interprets the data will vary. And you know, if you think about this chart here of emissions, for example, just here, there's all sorts of emotions going on. There's someone who bought here who hasn't yet sold. There's someone who bought here, sold here, bought here. And then maybe some people who bought here who are now thinking, oh, I'm losing money. There's all sorts of emotions going on in this chart. So people think it's self-fulfilling, technical analysis, but everyone is using it slightly differently and trading at different places along the line.
Great. Now we get a few more questions which are, let's say, rather specific now.
Yep.
We didn't touch the Nordic power market. Can you share a few words, thoughts on the?
Yeah, so I didn't look at Nordic Power, and I'm going to go to my screen to do that. So I'm useless without the chart. So you asked me about Nordic Power. I can't tell you anything about Nordic Power until I look at the chart. So if I go to the CAL on Nordic Power, straight away it's going to infill the data. So I now have a picture, and so I now can talk about Nordic Power. But until that time, and this is a really nice thing as a technical analyst, I don't have a view until I look at the chart, and I think that's empowering. So the first thing I can see here is that we're recovering on Nordic Power, and unlike German Power, we've really failed in this recovery. So it is quite considerably different. And there'll be people telling me all the reasons why, but as a technical analyst, I don't really care why. The fact is we are seeing Nordic Power breaking down. So that is the odd man out, if you like, and it's not so closely linked to German Power because of the generation and the uniqueness of Nordic Power. But the fact is we tried to make these new highs above sort of 25.70 euros. And I haven't looked at this at all until just now, but this is the beauty of the chart toolkit. Straight away, I get a view, and we've got a downside target to 20. We've got some short-term, this is 1 minute charts. We've got some very short-term downside targets, 20, 19.5, 17.5. So yes, it's a very good question. Sorry, I didn't talk about Nordic Power. This market is not looking bullish like German Power. I hope that answers the question.
Questions, since we're talking about CEE, you have CEE as well, Eastern Europe?
Well, again, I could look at, say, something like Czech Power.
Yeah.
And again, we're starting to notice here the data is less liquid.
Yes. Yeah.
So it's recovering, but it's nowhere near the level of recovery that we've seen in German Power, which is well and truly, trending away. But it is recovering. And equally, it's not yet selling off. So, we've not benefited from the rise in German Power as much, and we're not seeing the fall. But again, on the OTC screen, you might be seeing a slightly different picture here. And that's where, if you're trading Eastern Power and you're trading these less liquid markets, you need better data, and I'm here with Icon, which is probably not sufficient, and the same would be true of Italian and Spanish Power. It's interesting to see that Dutch Power is still holding bullish today, and we've got some upside targets here. So this is bucking the German Power trend, but again, I'd want the OTC data. So Nordic Power being exchange traded and German Power being heavily traded are much easier for me to comment on.
Understood. Sense. We have several questions around the point and figures charts, how that helps you to predict or to define targets actually. I think I tried to sum it up a little bit. Can you explain that technique a little bit?
So I often go to clients' desks, and so we've just had another target come in just since I looked at the presentation this morning. We've had this new upside target to 43. So I'm often asked at a trader's desk, can you explain the point and figure targets? And it's a book about that thick, and I teach it in the course of about an hour, and I have to now explain it in 30 seconds. And I start the explanation, and normally the trader is starting to look somewhere else when I start talking about how the targets work. But basically the targets are about buying thrust. So if we take this chart here, we had this target that was generated off this buying thrust. In fact, if I take this to full screen, so we had this target way back in January 2017 to 54 euros, and that's where we went. And then we had these downside targets that are generated off uninterrupted selling thrusts. And if anyone wants to know about these and understand these better, I'm more than happy to let them see the module in our training course on this, because it's a bit hard to explain short term. But you can see how reliable these targets generally are. We're given these targets of selling thrust. It's about the potential. So the first wave of selling gives us an ultimate target area, and the first wave of buying, so we saw here we had an upside target. That first wave of buying gives us some buying potential, and in fact we went a bit past that level, 42.55, and that's also bullish. If we go past the target, that's even more bullish. So that's just telling us some information about the bullishness. But yeah, I have to confess that teaching these in the space of minutes is quite a challenge. As I say, they're a technique that was developed as a trading shorthand over 100 years ago in the US. So it's not a new thing, but very few people use the targets. More and more people in energy trading are using them. Certainly our users are, because it's a dream, isn't it? You have a price target and you can start to think about, how you trade it. But there's a lot to them, and I really do recommend, if anyone wants to learn about them, I'll give my details at the end and they can message me and I'll enable them for the course.
I know that you have great seminars where we explain the whole technique.
Yeah.
I think it's not just textbook, but it's as well your style of seeing the markets, interpreting them.
Yeah.
So we don't want to answer everything now, at least for the longer discussions. That is great. Let me look a little again on the questions. And it's just a clarification, the CO2 emissions target you have seen in 70 euros plus even, that's purely based on a technical view, no fundamental.
Absolutely.
Exactly. So we get this question here again, but I think that's...
Yeah, I mean, so one of the things I would do with emissions, I can show you. So I take a chart like this, and straight away, the thing I do is just hit the T key, and it gives me the targets. And so this is the 35.25, 31.50 is the next stop, if you like. And then I just change what's called the box size, which it increases the granularity of the chart. So I got 39, I've got 69, and I can keep going, and there's 67. And if I go to what we call percentage log scale, because the log scale charts tend to be more accurate, I've got 47, 35, and in fact, I put this in the report to clients. If anyone wants this report, they can message me later and I can show them. But 76 was a number that keeps coming up. And if I go to 2.5%, 83, that's where I got it from.
Yeah.
37 is a bit higher than 36. But so this is a very speculative target. As I said earlier, I can guarantee you that we will hit 36 before we hit 83. I can put a lot of money on that one.
That makes sense. No, we have time for one or two more questions. Let me ask one thing we discussed as well. these kind of technical analysis can lead very much as well to automated trading strategies in the mid and in the short term.
Yeah.
That makes absolutely sense, and that's a topic where you're working on intensively. Is that right? Yeah?
Yes. So with more and more clients, we're working on technical analyst inputs for automated trading, and we have actually hundreds of built-in trading systems in our software, and more we can run scans to arrive at the best trading strategies that are producing the best results. And again, in our training, we talk about how to develop these strategies. And we're seeing more and more move towards automated trading, or what I like to call semi-automated trading, where the trader gets the alert that their trading strategy has been met, and then they can place the trade. So, and that's when they might think about position sizing, or, still a lot of traders, especially in OTC markets, want to have a little bit of a handle on placing the trade, but having the automated inputs that are giving them trading ideas, if you like, rather than just sitting there waiting for something to happen.
To get the timing right and then execute. Yeah.
And backtesting it as a strategy to check that it has worked and produced good results in the past.
Excellent. This was amazing. This was very interesting to me, I have to say. Thanks a lot, David. I think we learned a lot in these 45 minutes. And I'm happy to say again that we had more than 300 participants in this session. So we feel very motivated to continue this webinar series, but we'll do so after the summer break. So we take a short summer break and come back most probably end of August or beginning of September with new topics, new speakers. For today, very, very big thank you to David. Great to have you in this webinar. And yeah, we'll follow your news and updates as well on LinkedIn and other channels. Very exciting. I can only recommend that, as I wish as well to ask our customers here and viewers to follow us on LinkedIn. So we keep you tuned in on what's coming up in terms of webinars, but as well on some product launches we'll see in the next weeks and months coming. I would like to keep you informed there as well. Great. Thanks everyone for participating. Thanks, David.
Thank you.
That's great. Have a nice evening.
Thank you.
Bye.
Bye.